What's up, guys? Rustik here. Back after a little bit of a hiatus from making YouTube videos, but I've been thinking lately I want to get back on, start making a little bit of content, start talking about the charts a little bit, and bringing you some of that well-known Tesla analysis as well as some other stuff. So I know Kula was holding it down for the channel for a little while he was doing pre-market prep stuff. While I took a little break, now here I'm back. So we're going to go ahead and jump into it. Mostly what we're going to cover today is we're going to do a little recap on yesterday's Tesla trade plan. If you're not getting the Tesla trade plans, they are provided free on my X account or on the Rostok's X account. They're provided free on the Discord, discord.gg/Rostox. It's free to join. You don't have to pay for that membership. We do have premium access, which gives you access to 19 other tickers and 19 other trade plans that also hit just like these Tesla ones do. But we're going to go ahead and take a look at the Tesla trade plan from yesterday, which we posted overnight or after market trading hours on Monday. Here we are on Tuesday looking at a recap. Going to look at Tuesday's price. We're going to look at the triggers. We're going to look at how this trade plan played out for your intraday trade or your day trade on Tesla. How you could easily made, anywhere from like $200 to $300 on this trade, just trading single options contracts. So let's take a look at this plan here, right? So all of our trade plans are non-biased. They are bull bear case scenarios. They give you both. They give you 3 targets. They give you stop loss, and they give you the trigger for both directions, right? So super easy. All you got to do is trade the trigger and take profit at one of the profit target levels. Okay, so when we look at today's price, I'm going to just go ahead and annotate this in live time as we talk about it. Okay, price opens up right here. It's not what I wanted. I want this call out here. All right, so price opens up, right? Price opens. We get a down close candle. That is below the bear trigger. Okay, so I'm not going to take a trade based on the fact that we opened already below the bear trigger. I want to grab price as it's crossing the trigger. Okay, the trigger's at 440, and when we open up all the way down to 437 and that first 3-minute candle pushes down to 436, we're already almost $5 off of that trigger level that I want to catch. Okay, so I'm going to be watching price here, see what happens. Very next candle, right? What I'm watching for, if we move up, is for us to reject 440. And if we reject that, we can take that level and we can write it back down, okay? But in this case, 3-minute candle blew up above with force above 440. Okay, so that starts to tell me, right? That starts to tell me bear case breakdown. So the bear case is starting to break down because we now are above the trigger, right? So if we would have got caught in that, we would have tried to take the short on that first candle, and then we would have got blown out, and then it would have ran the stop. Okay, so that's why we wait for confirmations like this. So it blew out above the trigger. Bear case is starting to break down. It's not strong anymore because we're above the trigger. We want to stay below the trigger for the bear case to play out. So now we're in this chop zone, right? This chop zone, or this is the no trade zone, or whatever you want to call it. But we're not taking trades in between the triggers. We're waiting for the triggers. The triggers are based on quant data. They're thanks to our partnership with Gamma Edge that we get all the delta, gamma, theta, charm, Vanna, all the levels, right? We got the open interest, everything, all of our data that formulates these trade plans so that you guys can take advantage of them are all based on actual data, right? It's not just me throwing levels on a chart. And you can see that all the different levels are based on strike prices because this is options data. We're trading options. So the in-between levels, they're less important, right? We're just strictly looking for those strikes where price is likely to deliver. Okay, so we see price move up at 10:27. Well, at 10 o'clock, we see price crest right over the bull trigger. Okay, that would have been our first entry right there. Okay, on that candle close, enter on bull trigger. Okay, if you didn't catch that first candle, which we drew back down, there's no guarantee we're going to draw down or not, but this is where institutional order flow and institutions start participating. Right, this is the level that will cause the move up to the different price targets. Gamma starts kicking in. Dealers are hedging. They got to keep hedging on their positions. We're in a call dominant environment. Okay, so we're going to run on the triggers. If you missed it there, you get a second entry here. Okay, second entry on trigger. You could have added to your position. You could have jumped into the trade, however you want to run it. But that's the trigger level right there. Okay, we push back up, and then what happens? We make that run on our profit target, right? TP1. We tried to push up onto our second profit target. We didn't quite get there. I always recommend taking most of your profit, most of your partials off at that first target. That's a $5 move, so that's a pretty good price move. If you're talking about like a 50 delta, that's going to be like $50 per dollar. So it's like, roughly 250 bucks, depending on how delta accelerates, and what the delta was on the strike you took. So if you're taking at the money, typically 40 delta, 50 delta, something like that. If you're taking out of the money, you're going to have smaller delta, but as we get closer, delta is going to rapidly increase. So I usually try to say like at the money, close to around the money. There's no guarantee, if you're taking a 460, especially as we get closer to weekly expirations, that's going to hit. Okay. So I usually say at the money if you're taking those kind of things. Here's your first price target. We moved up a little bit. We faded out afterwards. You can see I got some volume candles on here. So these colored candles versus the white and gray tell me when volume is above average, or for the bull case volume, or selling volume is the red candles. Either way, these are volume candles. So they're just an indicator I use. We got weekly VWAP. We got weekly VWAP is gray. Weekly VWAP is green. Daily VWAP is gray here. But more or less, like the triggers are the important part, right? Sometimes the VWAP is the confirmation. You can see that break up candle before we hit our trigger, crossover VWAP. So there's our first level confirmation, even though it was below our trigger, right? That starts to say bull case scenario. That's what we're looking for. Boom, price above VWAP, right? Weekly and daily. And then price stayed above there until we started to fade back to VWAPs. Right now we're back on the trigger, so we'll see what happens tomorrow. We have a new trade plan coming out, but this is the recap on today's price action from yesterday after hours trade plan. Now we're going to go ahead and map out the new trade plan. We got the levels on the chart because as I update these, right, we keep the levels on. We don't need to keep these lines off of our chart. We're just going to adjust them every time I provide a new update for the community, right? And like I said, I post these on X. I post these on the Discord for free. The Tesla ones are always free. The rest of them are under or behind a paywall for all of our premium memberships. It's only 99 bucks. Figure if you take one of these trades a day, you pay for your membership for the entire month. Most of these trades hit. They don't hit stops. Sometimes time will expire, but generally it's either we didn't take a trade or the trade hit at least one profit target. So the new trade plan here, as you see, we're going to set up our bear case scenario first. So we're going to move the bear trigger now to 445. Okay, we're going to move the first profit target to 440. So we're essentially just moving our targets up. Where'd that go? 440. Because price moved up today. And so do our new profit targets and our trigger. So we got 435. So in this case, this week so far, it's kind of every $5. It doesn't always turn out like that, but sometimes the stop loss is always going to be 1-to-1 based on the first profit target. Now we'll move. Now we'll start to move our bear targets up, or bear trigger and our target. So 450 is the first one. Reclaiming 450 can open the door for 455, which we already have on the map, and then 460. Okay, and then in this case, 470 is the new gamma high. So we're going to move that up, and you can see, even though these are all equal targets, you can see this one actually expands higher. Our stop loss here on our bull setup is our bear trigger. So essentially, if price were to move up above this and start to fade, we're going to take our stop at the bear trigger, or we can take our stop at break even. It's up to you. But the way the trade plans are set up, like I said, most of the time they don't hit stops. They mostly hit targets or there's no trade on the table. So this is our trade plan. We got it all set up for today. We'll be ready for market hours tomorrow. Again, it's really just that easy. I'm going to go ahead and take the plan off itself. We'll just grab our real quick path tool. Again, if price starts to move up, gets back above VWAP, we're currently above weekly VWAP. So if we continue to see strength, we're going to see price cross 450. Okay, we're going to take that entry. It might come back or it might not. We're going to run at 455, 460, and then potentially 470. Okay, pay attention to news drivers. Those are important. If we have bear case scenario that's fading below 445, which can see a run on 440, which essentially could then run on 435 and as low as 430 there. So you got both your triggers, you got 3 profit targets. Good luck on your trading. I hope this has been helpful for some of you guys. If you want access to the Discord, the free version or the paid, I'm going to leave the links in the description below. Also, if you want access to our X account where we provide all kinds of updates between me and Kula or the Raw Sox account itself, I'll leave those links in the description as well as the link to Gamma Edge, who is our options data provider that we partner with. They got a 14-day free trial, so if you've never used them and you're an options trader, I highly suggest that you check them out. Even just take advantage of that free trial. If you got any questions, you can ask in the Discord. Again, thank you guys for tuning in. We'll see you on the next one.